recording. All right. So let's pick a random RDR day from this week. Let's go. The 27th. Why not? No, the 27th was. Oh yeah, Wednesday. Wednesday will be fine. So replay. We'll start the end. ODR. So let's turn on the. Okay. So got this. Let's go. Yeah, I was gonna say this is the transition right here to the gap, anyways. But we're not trading transition. Just looking for. All right. So 10:30. We don't have a confirmation. Nope. I'm gonna change this to oil. And I'm using quant for this analysis. I just want to check 6 a.m. wick confirmation for a Wednesday. In ODR. Wow, it's only happened once. Oh, 6:15. Also only happened once. Crazy. Oh, that's why. No. Oh, it's because I have removed news days checked. No. How is there only one data set? I'm confused. What, dear?
No, honey, I'm just talking, text talking. Before we head to Solvang.
But
I'm not talking to you, sorry. I'm talking text.
yeah, that's really weird. So yeah, that's intentional because I'm looking at. So hold on. Let's just open that. So, well, I'm not open it. I have it open. Let's go to oil, ODR, entire data set. Uncheck news days by day. No, not month, by day. Wednesday, true long. 6 o'clock. Oh, I guess there's only 9 data sets there too. Okay, so it's not so crazy. And there's only one here, but this is probably, so if we go, it would be. No, we're doing the 27th. I think this is just one data set. This is saying one data set for true long. And this is saying, yeah, but this is 6 to 6:30. So it would be more like this range. Because we don't actually have the full breakdown here. Because there's no... Yeah, so if I go at before choosing date and I select today, why can't I? After date? 2016 until today? Yeah. Yeah, but if you go 2016 until today, before chosen date. Oh, there we go. I have no idea how that worked, but we got it to 2011 now. Oh, yeah, it's still missing. Weird. 2016 until today. After 4. Weird. Regardless, not enough data sets, so we're not going to use that anyways. I just wanted to see what the extension was, and the medium max extension is basically 1.2, 1.3, so we like blew through that anyways. I was looking for the trade. So let's just change this to RDR Wednesday, true long. Well, we don't know the time yet, but we have a green box. So the thing that's interesting about quant that you can't do in Lens is you don't have to select a time. So I can go Wednesday, entire data set, true long, green box, and it's basically saying that this is like 0.1 is negative, 0.1 is our like main retracement cluster pre-confirmation. So if we put our fib on here, we're just anticipating a green box being a successful day. We did break the ADR model, so we could expect trumpet, but we're always expecting what it says first. So we had 1035 confirmation. So now, if you're looking to take a trade here, so it's saying 0.2 to 0.1 is basically the highest area of retracement. It's saying your max retracement drop off is basically 0.5, so you wouldn't want to take a pace past that. You wouldn't want to take a trade past that. Kind of lines up here too, 0.5. So this is your max retracement before extension still. and it's saying that it happens by 10:45 to 11, with the 70th percentile being 11 to 11:15. And then our extension is 2.2, and like it basically always hits 0.5 with this. Like 97% of the time, it's at least hitting here, which is, yeah, that's actually kind of crazy to think about. That like with just this information, 97% of the time, we know we're at least hitting this. So we're going to say 0.1 to 0.1 is our M7 retracement. Or no, what was it? 0.2 to 0, sorry. So 0.2 to 0. And we're saying that it happens by 11:15. So this is basically our window. And then the last would be 0 to 0.5. Past that, I wouldn't be interested in a trade at all. Happening in that same window. And then our extension time is basically between 1 and 2:15 in this scenario. So we're going to go, so 1 and 2. So no, you're fine. Like, you mean, zero, 1 to 1. No, I put in, how do you, what am I doing wrong here? There we go. Yeah, 0.2 to 0 is what I have for the mode. Yeah, this is the like drop off though. So like I'd be more interested in here because this is like basically the tall building, as Santi would say, right? So we'd be looking at 1.7 to 1.5. So I'd be here. And I would just put it, this would be my box. So if it comes into this box between 1 and 1:15, oh, I don't know why I have my box so low here. 1 second. So the median extension is 1.7. The drop off is 0.8. Yeah, so this is fine. And then what we're looking for is, okay, so this also goes into our weekly DR. So we need to be careful of that. So let's put a line here. Put that as, oh, gotta change this to white. And then let's change this to yellow. No, not that. This. We'll put our limiters on because that's important. That I don't use. This is a giant slew of volume imbalances in here. This DRC is a magnet, or this special is a magnetic. It's an unopened single fill. We'll put our directional imbalances on. We've got our daily box. Yeah, it's 1.7 minus 0.2. So median max extension is 1.7, and then I just subtract 0.2. Because the median max is what it hits 50% of the time. So I always subtract 0.2 so that it's hitting it more than 50% of the time. Now the exception to that is like if it's 1.7 is the median, but say there's 400 data sets, like it's just like a really high data set day for extensions, then I'll aim higher because, and I'll just trail because when there's way more data sets, the average is like muddied more. But when there's 20 data sets, it's basically saying that out of all of this, or 23 data sets, is saying out of all of the times that this information's been true, 50% of these days it's hit 1.7. So I just lower my expectation to 1.5. Yeah, I don't know how to. Hold on a second. 2016 up till today. Like, how do I change this? Oh, here. Like, I can only go to 2011. Reset filter. Yeah, why won't this? I'm gonna post. 1 second here. Paint, copy, paste. Yeah, if I hit that, it goes to 2000. And I can't. Very strange. Doesn't make any sense. Cut, paste, save. QX. Because I definitely would like the more data sets. Let's go MX7 QX. Anyone know why? Here, I'm going to try and do a force refresh on this here. No, but like even, okay, so let's just clear filter. Oh, I see. I see. Yeah, it's because I was filtering by M7 retracement. Interesting. That's really weird. One second here. So let's try this again. Confirmation. Wednesday. Long. True. 10:30. Green box. So we have 2008. But now why is this why is there so many data sets here? What's going on here? 10:30. Oh, maybe I didn't change it off Wick. Maybe that's what it was. So this would be, yeah, 0, 2 to negative 0, 1. So I had the wrong data here. I see what you were saying. Let's add this one. There we go. And this goes, now it changes to 2009 because that's the first set. Okay, I can accept this. Okay, so let's fix our chart here. So 1.9 would be the extension. So it'd be 1.7. Is that what you have? Okay, here I'm just gonna print this next candle. So how I do my back test is I say what I would do if something would happen before I print this candle because I want to see all the retracements. So in this specific scenario, so 0, 1. So let's change this first. So let's go take this out. So it's gonna be 0. 0, 1 to negative 0, 1 is going to be our actual retracements. And then 0, 2. So it's going to be 0, 2 to 0, 3 is basically my drop-off point. And then our extension time is going to be till 11:30. Okay. So in this specific scenario, and our absolute drop-off will be 0, 4. So if this next candle doesn't wick down here, I would probably enter in that candle. So I will enter. I would enter as this was coming up, but we'll just say we entered on the close. But I talked myself through what I would do so that the candle doesn't print. And then I'm like, oh, well, I would have entered down here. So I always I'm always treating it as if it's like it could be live price action. So like I said, if it didn't come down here, I would enter somewhere. And if in the last 30 seconds I saw this come down and then start working its way up, I probably would have entered here. But that's okay. So now this is our monthly box. We got this tried to go up. Well, I would have entered this anyways because this directionally imbalanced up. So I would have been in here. And our take profit would be the 1.7. And my stop would have been protected below the special, and I would have done an adjusted 5R. So this would have been my trade entry off that directional imbalance that got created here. And this would be our current trade that we would be in. Now, once this tags me in, 2R is right here. So this is a target. That's where I break even. I like this double magnetic, so my take profit would be, or the special magnetic, my take profit line would be up here. But my realistic target is the 1.7, which is the 5R. So I would start trailing aggressively right around here. If we make it up there, we'll see. Okay, so we get stopped out here. Now, this went into 0.4 to 0.5. So if we unselect that stuff and we select, so 0.5 to 0.4 to 0.5 has happened 3 times. It's in the 81% total. But we're still within our 11:30 window. So this is an example where if I saw the right reason to take a trade, I would enter a second trade. So that is a reason, but it's outside of my window. $11.05. So you clicked on M7 retracement time? Sorry, I don't think I'm seeing what you're seeing. Oh, the retracement right here. Yeah, yeah. No, that makes sense. Yeah, no, I got you. So I actually did take this trade here. What I did was when this engulfing candle happened, I actually put a limit order on the volume node with with my tick 2 stops below the volume node. And my thought process was just simply it looked like it wanted to come down. It rejected this limiter. It engulfed all the previous price action. So now, basically, for it to be a true day, I want it to respect this volume that it's created. This candle had an actual body close above all the other candles. So in terms of like relative price action, I just want to see this go this way now. Well, yeah, we smashed through the volume. We smashed through all of these down close candles we just created over the last half hour. And it didn't just smash through them, it actually closed higher than any other candle previously on the day. So to me, this is just a very strong candle saying it wants to leave. So I actually remember, like when you were talking about this, I could go look in my AMP history. I took this trade here, and I said if I don't get filled, I'm fine. If I do get filled, I just don't want it to revisit below the volume node. And I'm pretty sure that it dibs. Yeah. So that's right. Because there's no limiters or anything here, right? And I didn't want to put my stop below this limiter again, so I just said this limiter's already been rejected. We retook all the price action. I want the DR, like I don't want it to come back into the DR. So my protection behind the DR was just the volume. The volume should push it up. And then I remember this here, it double dibbed. So this was like you could have even taken a trade here with your stop below the DR and went for target as well, and that would have been a safe trade because this is now showing you this isn't just a single directional imbalance. This now dipped up above two other limiters. So this is basically just saying the price wants to just go. Like that's what that shows me. Weird. And then it comes back. Yeah, I remember this. I'm like, oh, I'm probably gonna get stopped out because this dipped down, but it actually never went below the volume. It to the tick respected it. Oh, this isn't the day that I remember. Weird. Okay, so I would have lost this trade, and then you're still in this trade because you said you got in down here. Gotcha. Yeah, no, that makes sense. So I would have lost my two trades here. I'd be probably done for the day. So this here. Yeah, I don't you can ask anybody that's been on my lives where I like backtest. I really don't trade retirement setups. I just they don't win enough for me to like enjoy it. Now, there are retirement setups that do look appealing to me. So this dip down. So what is the end of the extensions would be 1.2. So the end of the retracements before an extension would be 1.2. So if we were here, this is This would be 1.2. So it'd be right where the DR is. So it's basically saying that it's never broke the bottom side of the DR on a true day. I would look back here. No, I wouldn't take a retirement here. So I don't like that there's a gap here. I don't like that we have the broken model. We've already swept all the highs. So to me, this just is saying that it wants to come down here now. So I wouldn't have taken this. And it runs to 0.9. So what is the... where's the extensions? Is 0.9 even in... Yeah, it's not even in... It's not a mode. It's literally nothing. Like 0.9 is... It is a mode of this little cluster here. But like on a true Wednesday, we're much closer to the 2 to the 2.7 range. So even if you took this setup though, so let's say you got in on this rejection for some reason, what would that end up being? You'd probably only take it to the DR because the odds of it making a new high now are very slim. So it'd be 3.6. Yeah, I would never have taken this trade, so I'm not going to put it on here. But is there a way we could have prevented... I probably would have been break even on this trade, actually. I don't usually move to break even, but when we have the engulfing, the rejection, and the double dib, I probably would have went break even right here on this candle open. Just because I lost the first trade. If I wouldn't have lost this trade, I wouldn't have broke even here. But I always like to protect my second trade a lot more because I don't like to be losing 2 trades in a day. So would have lost these 2. That's fine. And where was that? Yeah, so it also came to the weekly DRC. And then just sideways for the last 10 minutes. So you could have used this as your target, I guess, technically. If you were still assuming it was a true day, you come in, you gotta be 2 ticks, well, 1 tick below the DR bottom because it's never been there and made a new high. So you could have had a 6-hour trade off that, which isn't bad, but that's also waiting till 3:30. The extension time for oil, we all know, is like 2:15. So you probably would have closed your trade like here, especially when you saw this big sell candle come back in. You're not assuming, like, you don't usually have this type of extension in oil after 2:30. So this is just a really bad trade, like, setup, unless you have some other form of confluence that you're basing it off of. Yeah, exactly, right? It's unlikely to make this new high. Like this is a very abnormal day for oil, just in general. So like this trade setup is highly unadvised. Like I would never take it. So that's that. So let's turn off all this extra stuff here. Multi-time frame. Now, with that said, we did have this magnetic here, so the magnetic VIB is valid as long as we don't create a false day. But like I said, yeah, I was like, when you see all this price action pricing down, we're making new lows within the swings of the open. This to me screams that it's probably going for this gap from earlier in the week. And instead we created a new gap. So let's pick another day and see what would have happened. Let's go the previous Thursday. Previous Wednesday. Actually, let's just do this. Let's squeeze and let's pick this day. Now I don't know what happened. I'm not gonna trade ODR because most guys don't trade that. This would be what I would look at for a transition trade. That's funny. Either. Oh, never mind. Always look further to the left. Key indication. 1010. 1025. Okay, so we got a confirmation. So this is, I'm just going to use the whole month. So this is Tuesday, true long, 10:30. This is saying 03 to 01 is our -01 to -03 is our mode. So it's going to be here, and our times are 10:40. So 10:30 or 11:30 is our drop off, and then we got 04 to 05 in there. And then 06 to 07. And then we could say 0 to 01 on the other side, potentially. So in this case, what would I do? So Tuesday's long extension is 1.3, so that's important to have on there. So if we go just copy, oops, let's just copy this. And it'll be 2:30 would be our time. And let's look at, there's no big limiters here. Where's the weekly? Oh, way behind us, so we're clearly on an uptrend-ish. So we don't need that. let's highlight the DRCs that are here. And then it's some multi-time frame vibs. That's okay. We got our weekly box. That's different. And then this is True Day. Yeah, this is True Day. So we don't like that this is below that. Let's take this next candle. So I don't like that there's no wick on either side. I would wait till the next candle. So when this rejects the volume node, this is actually magnetic. That's weird. Why is it magnetic? Special. So when this comes down and rejects, so this is, where is our M7 retracement? So 06 to 07 is like the last extension or last retracement before an extension happens. In 88 data sets, there's like 2, 4, 5, 6, 7, 8. There's 8 more past that. And we're going for a 1.1. So if I was to assume this was a true day, I would put a pending limit order. Does this give me 5R actually if I go here? It does. And that's to 1. This is 1.1. It's a 13-point stop. So I would go in for a trade on this candle. On the close of this candle. The what? Yeah, so for me, basically all I'm looking at is so Tuesday, long true, green box. Yeah, this is Tuesday. Yeah, so not basically the way I look at this form of data, obviously we want the retracement to be negative 0.3 and then extend based on everything we see here. Because past negative 0.3, the odds of it extending are really low. But if we're always assuming it's a true day, it's always worth it to take a trade if it makes sense. So negative 0.6 to negative 0.7 is basically 83% of all the retracements before an extensions happen on a true day. So the way I look at it is instead of waiting to see if we make a new high and then hoping to get into a trade, if I'm just willing to take my trade here, if I can get 5R, then I don't want it to basically come below this negative 0.7 because there's only, so like we respected the volume node. It's only ever come past negative 0.7 8 times in 88 data sets. So less than 10% of the time it's went below this and still made a new high on the day. So this to me is like, this is basically a retirement setup already. It's like, this is either going to be a true day or like I lose this trade and I'm just done for the day, and I'm okay with that. You could make an you can make an argument to be like more preserved, and you could say, okay, it might come back down into this zone, and you could still go for your extension, and then you could be down here like below the IDR, and that covers basically all of your retracement data, and then you only get a 3.8R trade, but you're like, hey, like now I'm just protected. Like this is just, I'm either making 4R today, or like there's just no trade today. So like these would be like your two types of setups. The reason I would take this one is because we had this rejection. This is basically the last like tower in quant for a true day, and it rejected from the volume node, so it closed above the volume that we're creating right here. So to me, yes, we have this M7 special down here, but we already filled the gap. So this is either, to me, it's going to keep going up, or it's going to be a false day and it's going to come sweep the lows. We have the broken model. So I basically just want this to hold as up as a true day and keep going, and that's why I'm willing to take this trade. Because in my head, the way I look at it is, if this comes down here, it's just going to end up being a false day, and this trade isn't valid either. So I'd rather take the 5R setup, and I might not win as much, but when you're playing, like most of my trade setups, I'm trying to get 5R or better. Because then just long term, I have to win less, but I still have like a 45% win rate, so I actually win way higher. So then we get our dib up. So I would have been break even on this dib up. So that's a break even trade. Now we made a new high. Our time isn't over. So because we're break even, this is one of those things where M7 says you have to be willing to re-enter if you still think that it's valid. And I would have to see if I get, so I don't get a better risk to reward. So I don't know. We would have to be below this. I went 2 ticks before. We wouldn't want to see this revisited. It didn't close below this. 11:10, yeah. So I think I would have a pending for 6.4 here, knowing that it's 1R better than my previous trade, which I'd be happy with. Okay, I'd be break even right now. Yeah, well, it's basically like, I think almost all days say that. It's basically, if a candle closes below 0.5, it's way less likely to be a true day. Almost all the time. And I think M7's said that as well. It's like you basically want your maximum retracement to never close below the 0.5, or you're looking for a retirement setup, because that's just like how the algo operates. I don't really understand it. It may, like, after he said it, I started back testing and like looking at a lot of my data on that, and it's pretty accurate. It's basically, I don't go off wicks. Um, they're just not as important. But if I ever get a body close below zero point 0.5, I'm much more cautious. Now, we have a lot of added confluence on the 0.5 for today. So we have this magnetic special that was created. I don't think I do, no. Mm-hmm. Oh, yeah. Yep. I see. To come, so like, doesn't matter if it's a true or false day. We're saying 98% of the time we're hitting this regardless. I got you. Yeah, yeah, I got you. Um, yeah. So that's a really interesting statistic to look at as well, right? It's like you can, and like even if the algorithm started adjusting, it's like okay, it's only going to 0.3 or 0.4. You'll be able to see that in real time as the data gets updated. So it's like as long as you're using those data points, it's like okay, well, 90% of the time, like we're hitting right here every time. So it's like we haven't hit that yet. So you could aim for that. Yeah. It's huge, especially if the false day says that it also hits that at a very high percentage. Yeah, you're basically like, okay, we hit the 0.5, now I can trail tighter or whatever you want to do, right? So on a day like this, where I got break even here, and then this one, I'm obviously break even once we get this candle closed and this dip up. When I start seeing impulsive candles like this, what I'm looking at is on a true day, what is like where's our extension drop off? Like real drop off. Not the median, not the mode, like what is the data saying? And from what I'm looking at, it's basically saying that it could like 2 is like 2.1 to 2.2 is like the last tower. So like I have my take profit already like scaled up here, and then I'm just gonna end up doing smart trailing. Once it hits the median, which is 1.1, I'm basically every 2R I'm going to start trailing um, to try and get the most out of a trending day as possible. And it backfires sometimes, oops. But this is where we, and then I always have as well, I have 230 marked out because, oh, it's already marked out here. Because oil just doesn't like to go past that. Don't break even me. That would have taken probably a partial out. Maybe, maybe not. Don't really need to go slow here. And that's, so we end up like point something on the day. That's funny. Either that tagged us out, may or may not have. Depends how many orders you had there. And you get 1.9 on the day, which is not bad. Or call it 0.9 or 0.95 on the day or whatever. And you could argue that, like, this is what. So, some people trail, some people don't. I really don't, unless it's already at target. And, looks like it's like a super super trending day. Not in oil, anyways. In other instruments, I do because they just function different. But when I trade oil, oil has a very very even say this happens. Oil is very common to come up here, almost hit the target, come right back to entries, and just go. So like oil just operates really weird as a commodity. Like gold doesn't even do that. Gold is like I can show you the gold trade that I took the other day. This one. I took the retirement setup on gold, and once this started exploding up here, I took my take profit off. It was the weekly box, and I trailed this by candle close, and I got stopped out up here. Whereas oil, like it'll revisit this 4 times before it's like, okay, we're gonna go to target now. Oil's just a really weird commodity. But I always close at 230 on oil. Oil's also the only one that I do that. Like ES obviously is more end of day plays. Gold is really only good to trade on the ODR, so I don't really back test it. NQ, I had that nice 5-hour trade in between sessions. But yeah, I wouldn't. Yeah, so all. Yeah, like so the nice thing about QX is it has all the data. The bad thing about QX is you can over refine to the stupidest levels. So I personally don't like if there's less than 50 data sets, because to me that's just not enough. Like you can argue, like you'd have to backtest what you think is fine for yourself. But to me, if there isn't 50 examples of something over 20 years, it's just not enough time, or it's not enough data. Like you're basing it off of something happening so few times that could it happen again? Sure, but it's like it's the same as taking the. I remember there was one time M7 said that I think it was like a 715 candle, or I don't remember. There's a specific candle where he said if there was ever a confirmation on this time in 20 years, it's never held true. And it was like it was the end of the ODR, so like that's why I'm saying like 715 or something. It was like some crazy like data that he was looking at in Prism before quant became a thing. But it was still only like 12 data sets or something. But he's like, in the 12 times that we've had a confirmation at this time, it's never held true. So like, I guess it really just comes down to what you want, right? So like, if you say you narrow it down, so let's just say we take the mode here. So there's 23 data sets in 22 data sets in the mode to the 70 percentile. So in these 22 data sets, basically, if you feel that the 22 data sets is enough, the only way you're really going to be able to figure that out is if you backtest 300 times with a similar data set using all the same qualifications. So like the only way to know what's too much and too little is by back testing. So same as like lens, how we would you'd have like your parameters and you'd be like, okay, these are the parameters I'm using for every back test. You would have to do the same thing with Quantex for every back test. So like you can't, like say we were doing um like say you were doing you went back through the last 2 years and you were looking specifically for Tuesday long confirmations between 10:30 and 10:40. You would have to use the same qualifications for each one of those back tests every time. Now, where you can play with the data a little bit is, say you're like, okay, I want to use the first 4 buckets. So now you could use all of this data for Tuesdays in the first 4 buckets, and you could play with that. It's like, it's just really finicky, right? Because what you're looking for is more precise data. But the problem is, if you precision the data down too much, you're not actually getting true representations. So I would even argue that, like when I use Quant for all my testing, all I'm looking for is I I really like the M7 retracement because just like here, it's showing me the absolute best areas to have a stop. So it, because this is basically saying like this is just like HOS LOS but more precise, right? So it's basically saying we've never went past negative 0.7, which is 83% of all the retracements, and still had a true day or made a new high rather. So this is basically how I use Quant. Is I'm looking for the M7 retracement. I'm looking for the M7 retracement based on time, and I usually like to actually take this down. I know M7 likes to go up, but I like to see where the 70 percentile is for this. So like my drop off time for entering a trade would be the 11:20 close candle. And as long as so I'm basically looking at 2 different things. I'm basically I'm saying if it comes into the 0.6 to 0.7 range and we don't get a body close below that, I'm probably entering a trade on this day based on these parameters. But at the same time, if we haven't extended yet and we're in that 11:15 window and we're still somehow in this range, I'm probably just entering a trade by 11:15, understanding that as long as I'm using, like I would still use the same stop. So like let's take these off. Let's go here. So let's pretend I didn't enter any trades like prior to here. At 11:15, so on the close of this candle, this is basically the M7 retracement time is saying that by the 11:15 close, 75% of all retracements should be done for the day. So I should, in theory, be able to use this as my AMR 75% of the time, going for new high, 0.5, whatever you want to do, and you just adjust it to whatever your risk to reward needs to be. And then that it just plays out. or it doesn't, right? So we didn't make a new low, and we made a new high. So the data, even just looking at the base data, not talking about median extensions, it just played out, right? It's saying that the last point of time before retracement, I guess it could still technically be 1130, but we're using the 70 percentile in this case, the 75% range. It's basically saying 75% of the time, this is the last point of retracement before we see a new high. And it happened perfectly. We saw the new high. So that's just how I use the data. And that's why like you can overanalyze. You could be like, well, there's still another tower here. But once this makes the new high after confirmation, well, I guess technically these did make highs, but I only count body closes. I know that quant includes wicks and everything includes wicks, but to me, I've always been a body close guy. So that's just how I operate. So now the data's played out. The only part that hasn't become true for the day is just where our extension lines up. Now, like you said, so max retracement or max extension above 0.5, we have a 98% chance to hit that. So we've hit that. So we had the new high in the retracement areas that are max retracements before new highs created, before true day, yada yada. We hit the 0.5, which is 98%, which has a 98% chance of being hit. So now basically, to me, all the data is just true. Like everything that could have happened with the highest probability has happened. The only thing that hasn't happened is our actual target being hit, which is 1.1. Well, 1.3. So then you just have to pick your battles. So, like, you could even argue that using the quant data, that say you entered at 11:15, you had your stop one tick below the AMR. You know that it has a 90% chance of hitting the 0.5. This should be our low. So you could even just adjust this. Be like, yeah, I want a 5-6 hour trade off of basically what I'm seeing here. That it's going to go to the 0.5. Like, you could go back test that as a theory, right? Because you're just using the data. My stream is cutting out? Oh, your mic's really, really quiet. You're hard to hear. I thought you were saying you, but you're saying him. Oh, well, I'm recording this, so I'll be uploading it to my YouTube anyways. I'll send it. I'll once the video's in HD, I'll upload it, and then you can just fast forward to like this area. Is what better? Your mic? No, it's like it's almost like your input volume is like really low, or maybe it's using like if you have a plugged-in mic, it's trying to use like your webcam or something. Like it just sounds like spatial. I don't know if that makes any sense. Yeah, it's probably just the like Bluetooth connection between the laptop and the headphones then. But yeah, that's all I'm gonna do for now. I was gonna do bucket confirmations, but I didn't realize what time it was, so I'll be back on. I'll probably be back testing in another 3 hours or so. But I'll upload this right away before I leave, and then I'll drop the link, and you can just fast forward to the last like 20 minutes or whatever. And explains how I'm using Quant. It's basically you're just using it as like Confluence for data, right? Like it's like if 70% of the time this is the furthest the data should go before it's a true day, then you're just leveraging that in your favor. Like, and you can be stricter with it. You can be like, okay, that's the 70th percentile. I want to operate in the 90 percentile. You're going to have less trades, but you're going to have way better R. So it just ends up coming down to what your threshold is. And then when you're back testing, you just have to use the same parameters for each back test. That's the big rule, is you can't change your approach based on feeling. You have to change your approach based on data. And then, as you guys saw, just something that I do is if I see this is confirming, I used to just like hit the next candle and print it, and then if I saw something, I'd be like, oh, well, if this happened, I would have done this. Instead of doing that, what I say is once this confirms, I put in my retracement boxes, I look at all the weekly DR, I look at the specials, the limiters, everything, and I say, before I print the next candle, I say, okay, if this was to happen in this candle, this is what I would do. And if the answer is, like, the answer could be even something as simple as, well, there's way too much retracement time still, I wouldn't do anything, right? Like, just sometimes the day depends, because sometimes, like, your retracement time window is like this. So it's like, okay, if this tapped into this box, I'm just taking the long here. So it's like, it's almost like preparing yourself for, like, an actual live environment. Whereas if you don't say stuff out loud, or at least talk yourself through it in your head, you're going to be reactionary based on what happened, and you can't do that when you're trading live. So it's just not realistic. If that makes sense, anyways. But yeah, I will be back in a bit. I'll upload this and I'll drop the link in the chat, and we'll chat with you guys in a bit.